Welcome to the world of Test Portfolio XSX. This video was created with the help of artificial intelligence. It provides a weekly summary of key economic events. The featured portfolio is simulated, fictional, and reflects my personal perspective on recent market developments. My main goal is to explore whether the S&P 500 can be outperformed. To do this, I compare the performance of three different portfolios: my own fictional portfolio, an S&P 500 portfolio built using a lump sum investment strategy, and an S&P 500 portfolio built using the dollar cost averaging method. This video reveals which strategy performs best and why. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur. Ready to get started? Let's go. The U.S. stock markets experienced significant events that influenced the markets. Here is a summary of the major news. Market performance: S&P 500. On June 6, the index closed above 6,000 points for the first time since February, with a 1% increase. This growth was due to better-than-expected labor market data and the strength of technology stocks. Dow Jones rose by 443 points, 1.1%, recovering its losses from the beginning of the year. Nasdaq Composite showed a 1.2% increase, mainly due to the strength of the technology sector. Key events: 1. Tesla and the Trump-Musk conflict. Tesla shares fell 14% on June 5 after the conflict between Elon Musk and Donald Trump became public. Trump threatened to eliminate Tesla's government subsidies, resulting in a $152 billion loss in market value. The next day the shares rose by 5%, partly due to restored investor confidence. 2. Gemini IPO announcement. The Gemini crypto exchange, founded by the Winklevoss twins, secretly filed for an IPO in the United States, signaling growing investor interest in cryptocurrencies and a stabilizing market. 3. Labor market data and Trump's pressure on the Fed. In May, the U.S. economy created 139,000 jobs, exceeding expectations. Nevertheless, Trump again pressured the Federal Reserve to cut interest rates, citing the rate cuts in European countries.
Weekly earnings reports and notable news. Technology Broadcom, AVGO. Results: strong quarterly report, especially in AI chip sales. Market reaction: share price declined despite results beating expectations. CrowdStrike, CRWD. Results: exceeded earnings expectations. Market reaction: share price fell by 7% due to weak future revenue guidance. Credo Technology, CRDO. Results: 180% revenue growth. Market reaction: share price increased by 24%. Hewlett Packard Enterprise, HPE. Results: the company reported quarterly results in line with expectations. Market reaction: share price remained stable as results matched analyst forecasts. Guidewire Software, GWE. Results: the company exceeded revenue expectations, particularly in cloud services. Market reaction: share price increased due to the positive results. Retail Dollar General, DG. Results: strong quarterly results and raised annual forecast. Market reaction: share price increased by nearly 14%. Five Below, 5. Results: strong results and raised guidance. Lululemon Athletica, Lulu. Results: quarterly earnings report published. A market reaction: share price declined due to lowered annual profit forecast. PVH Corp, 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 PVH Corp. The company reported mixed results, with revenues slightly below expectations. Market reaction: share price declined slightly due to disappointing revenue figures. Campbell Soup Company, CPB. Results: the company reported results in line with expectations, indicating stable demand for its products. Market reaction: share price barely changed as the results came as no surprise. Energy Meta Platforms and Constellation Energy. Event: Meta signed a 20-year agreement with Constellation Energy to purchase all its energy production. Market reaction. Constellation shares rose by more than 3%, and other nuclear energy-related stocks also increased. Investors.com Healthcare sector performance. The healthcare sector showed the strongest growth among S&P 500 companies, with 78% exceeding EPS expectations. Moderna mRNA. Results. The company's new COVID-19 vaccine received FDA approval for high-risk groups. Market reaction. Share price rose by 5.1% on the approval news. Automotive Daesh, Tesla, TSLA. Event. Public dispute between Elon Musk and Donald Trump. Market reaction. Share price dropped by 14%, then rose by 3.7% on Friday. NIO. Results. The Chinese electric vehicle manufacturer reported results in line with expectations, but warned of global supply chain challenges. Market reaction. Share price declined slightly due to concerns about future outlook.
I have not changed my existing strategy, as I remain convinced that semiconductor manufacturing companies' stocks have strong growth potential ahead. Despite market corrections, the long-term fundamentals remain solid. The rise of artificial intelligence, the explosive growth in demand for data centers, and the surge in global technology investments are all directing investor capital toward chip makers. Therefore, within the presented fictional portfolio, I continue to hold existing positions in key players such as NVIDIA, AMD, and Broadcom.
Due to recent market movements, a more noticeable divergence has begun to emerge between my fictional portfolio and the S&P 500 benchmark index and its passive replica, the SP 502 portfolio. While the S&P 500 continues to rise steadily but moderately, my hand-picked portfolio is now beginning to truly break away from the benchmark's performance. This performance gap is the result of several factors: the strong rebound of semiconductor stocks, and the fact that, unlike passive indexes, my portfolio excludes underperforming sectors. The coming weeks could be critical. If the momentum in the technology sector holds, the difference may become even more pronounced. Let's take a look at the comparison in numbers. Strategy 1. Lump sum. One-time investment. The first investor bought an S&P 500 ETF on January 2, 2025, investing the entire $15,000 at once. They've held the position ever since. No additions, no withdrawals. Current performance 2.02%. The blue line reflects this result based on the most recent Friday closing price. Strategy 2. Dollar cost averaging. Gradual investment. The second investor splits the $15,000 into 12 equal parts, investing $1,250 on the second trading day of each month into the same S&P 500 ETF. This approach helps smooth out volatility and reduces the risk of poor entry timing. Current performance 2.84%. The green line reflects this strategy, slightly outperforming the lump sum method so far. Strategy 3. My fictional portfolio. This portfolio is based on my own stock picks and investment decisions. It launched on March 19, 2025, with the full $15,000 invested in various individual stocks over multiple transactions. I've explained my choices in earlier videos. Current performance 6.81%. Note, these performance metrics exclude broker fees and taxes. They reflect only market-based price movements. The first image shows the comparison of the three strategies. The second image shows the current percentage allocation of unrealized stocks in the portfolio. And finally, the third image displays the unrealized percentage performance of individual holdings. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.